Hello, everybody. Welcome. We're just waiting for people to get settled or to join. So we're going to give it just a quick couple of seconds, and then we'll dive right into the hottest topic uh, of the year, maybe the last decade, which is valuation. But thank you for joining us today. If you want to drop into the chat, let us know where you're calling in from or where you're joining from. That would be awesome. And we're looking forward to this discussion. But we actually have a pretty good starting point. So maybe we'll just dive right in. Thank you guys again for being here today. We're really excited to have this conversation on valuation. We made it really easy for everybody. There are two of us here. We're both named Adam. We're both from Sponsor Pulse, so you can't really mess that one up. Adam Groh is our Chief Customer Officer, and I'm our Chief Executive Officer. So we're excited to get into it and to talk all about valuation. Before we get started, just a couple of housekeeping items for the way that this will run. I'm sure we've all been on a million webinars. We're going to try to keep this pretty light and fun and engaging as we can make a webinar. So please participate. You will all receive a recording of today's conversation. If anybody didn't make it, they'll obviously get a copy of the recording as well. If you have questions, if you have comments, feedback, like we want to hear it. Valuation is a hot topic. It can get heated. There are a lot of different perspectives. Nobody has the right answer, is the reality of valuation. So we encourage you to ask questions, to challenge us, our methodology. I think that's how we get closer to a better outcome for the industry, is by having conversation, which is why we're doing this today. A couple of quick kind of tips. There is our top 50 most valuable sport teams report and their opportunity value range. Those are all available for free with a free Sponsor Pulse account. No questions asked. Just go to sponsorpulse.com, create an account. If you have one already, you'll be able to find it and access it there in the top carousel of your dashboard. And then we do want to call out, there is an expanded top 100 list that is available for purchase if you would like. That covers obviously more scope of the different sports teams in the US. It's available at top100.sponsorpulse.com. That's that. So let's get into it. Why are we here? I think generally speaking, valuation is a big black box. Nobody really knows what goes into it. Nobody really knows how the sausage is made, and that causes a lot of tension in the industry. I think one of the interesting things that we're all privy to, because within our industry, there's a ton of press, a lot of attention, because it is sport, because it is entertainment, it is, these are the things that people, consumers, care about most. We're all consumed by this constant flood of news that, if you look at it on the surface, it looks like there's a ton of money just pouring into the industry, and we're not disputing that. I think the facts are the facts. There's a lot of money pouring into the industry, but oftentimes what that does is it does give this sense of, valuations are growing, and it's important to take pause and to say, okay, but why? Team valuation, in terms of how much teams are trading for, is very different than sponsorship valuation. What we're focusing on today is the value to a sponsor, which ultimately is, the foundation of how sponsorship marketing works. So it's important for us to just remind ourselves that because we're consumed by the news and because we all take it in on a daily basis, and because the industry has seen tremendous growth, it's still worth acknowledging that the smaller deals very rarely hit the newswire. People aren't often talking about community partnerships that are upcoming or that are being struck. It really is focused on the biggest deals, which can sometimes start to inflate or perhaps give perception that things may be rosier than really what lies underneath. And I think that's part of what we've tried to validate here over the last couple of years. In 2022, we ran this global State of Sponsorship report. We spoke to thousands of sponsorship professionals across the globe, and there were two things that were pretty clear. There were a few other findings, obviously, from that report. This report's also available for free, stateofsponsorship.com. 53% of us in this industry agreed that valuing assets and valuing sponsorships was one of the biggest challenges that we face. And 60% almost of us agreed that there was a lack of trust between buyers and sellers. So when you think about an industry that's got so much going for it, there are some pretty fundamental issues that valuation has created, and that we obviously need to, as an industry, come together to sort out and to fix and to try to improve and innovate on, so that we're in a better place, so that we can make better decisions, so we can make better partnerships and get better outcomes, and ultimately add more value to people like all of us who are engaging with sports and music and entertainment properties and causes. That's really what this is all about. We have a lot of tailwinds that are supporting us as an industry. So we know that there are lots of different events, a lot of innovation that we'll be talking about later around different teams, different leagues that are bringing new events to the forefront to drive fandom. We know broadcast rights deals and even beyond broadcast, but the way that things are going and some of the latest that we've seen in terms of media rights deals are really propping up the industry. We know activations are growing, and we know the importance of activation for brands to get in there, to obviously connect with the audience. Those are really big fundamental building blocks of our industry. We've also had the arrival of new sports that are driving interest. Cricket here in Canada and in the US, growing popularity. You got women's sport that are finally getting the attention that they deserve. You also have new channels, so be it the way that people are consuming content, that are all also helping build this industry. And we've got the arrival of new industries. So whether it be crypto, yes, different takes on whether that was all it was cracked up to be. There's still a lot of investment coming from that industry, sport betting and the legalization of that, even cannabis as an industry that's started to get legalized in different pockets. New industries bring new attention because those industries see the value of sponsorship and of connecting with consumers. So there's been a lot of really good for us as an industry. But if what we just said was true around the lack of trust between buyers and sellers and the role that valuation plays potentially as one of the reasons for that lack of trust, it does give pause to say, well, how do we fix this? We can all try to do it on our own. I think that's largely what us and many other industries have done, is you try to go at it and build our own solution, build a better way of doing it, keep it proprietary, keep it internal and only to you, and make it kind of your secret sauce. And that's not wrong, right? But it makes it harder to actually move forward as an industry if we don't have something that we can all rely on, or something that we can all reference as at least a starting point. Doesn't have to be the right perfect answer. No, there is no perfect answer. But if it's at least a starting point that we can all wrap our heads around, nod along and say, yeah, we agree, this is at least a data-driven take, that will probably get us further along the path. So when we think about the role that we play in the industry and what the industry would benefit from, a common language that rights holders, brands, agencies, suppliers, that we can all kind of wrap our heads around and say, yeah, we're talking the same language, that's helpful. So that we're starting from a place of common understanding. Data, and it's not just data, it's the right data, it's credible data, trusted data around consumers. Consumers are how we all unlock value from sponsorship. So this allows us to really tap into that, right? We bring data to the forefront that is trusted, that's credible, and then we build community so that we're not hiding, we're not just sitting behind the curtains with this approach or this secret formula. We're sharing it because we want people to challenge it. We want people to talk about it. We want the industry to be able to move forward so that there's better deals, more deals being made, but at the right price points where everybody's winning. And we think ultimately that can lead us to a much better place as an industry. And that's why our role, what we've been trying to invest a lot of time and energy into over the past several years, is building resources and making them available to everybody. We have a benchmark report that looks at 400 plus sponsorships that we've measured on our own dime to give the industry resources benchmarks, so you know what works, what doesn't work, what's the benchmark that you should be comparing yourself to by industry, by category, by brand, even what activations are working. Go use it. It's there to be used. We've got our top 50 most valuable sports teams we're going to dig into in just a second, and we've even got our latest report on celebrity. So much money being spent in partnership marketing with influencers, with celebrities, but media metrics are only part of the equation. So how do we help leverage consumer data and understand what consumers care about, who they care about, to help round out that story? These things are all free, available, and for you to use, because we believe that the industry will be better off if we band together and act as a community. So that's what we're here to talk about today. So let's get into it. I'm going to throw it over to Adam, who's going to talk about valuation.
All right, thank you. And I just shot a message in the chat because we've already got good questions coming in. Keep them coming. And then when we get through some content where we share some of the things we've learned and some of the things we want to get through today, we'll go kind of through a Q&A session. So thank you already to those who've lobbed a few. Yeah, let's talk. So Adam kind of set the stage, and I think hopefully some of it resonated with you. And what we want to go into now is not only sharing kind of how we valued certain properties and what we learned from that process, but specifically just take a beat and talk about how we approach valuation. And it's a bit different than maybe what you've seen. We hope and think it'll resonate, but we do need to ultimately talk about methodology and details and perspectives on how we arrive at a number for something that's at the end of the day not as tangible as many other things. So if Adam clicks through here, I'll get into kind of what we're going to use the term opportunity value. And so, when sponsor Pulse or myself or Adam is talking about the value of a potential opportunity for a sponsor, we're going to call it opportunity value because that's ultimately referencing the methodology that we're putting forward today. So before we go into the exact, weightings and numbers and inputs and outputs, just from a mindset, we recognize that you could pick any sports team, pick the New York Yankees. You could sponsor them for probably a few $1 million a year, or there would be a package that could be put together to sponsor them for tens and tens of $1 million a year. And both of those could potentially be good ROI situations depending on what you've got. So when we talk about opportunity value, we first acknowledge that there's a range of outcomes for a number for a sports property or any property we deal with. Our number, our opportunity value, is going to be based on fact. It's going to be based on consumer perspective, and especially, most importantly, the true business case for what the sponsorship can achieve. How many consumers can possibly be reached and influenced by this sponsorship that can ultimately drive business for the brand? As much as we work in sponsorship land and talk a lot about viewership, social following, media impressions, at the end of the day, for a brand that's about to spend money with a sports team, the question, to the CFO of that massive organization who doesn't maybe necessarily live in sponsorship world, has to answer the question, we're going to be spending X dollars. I need to know that there's a business case that it's going to return more than that, and ideally a lot more than that. Sometimes in our space, sponsorship valuation, the answer can depend on who's asking the question, right? Is it the valuation on behalf of the rights holder of the media? Is it the valuation on behalf of a brand looking at an ROI calculation? Is it the valuation for the property to go to market and start selling that asset? This is the same number regardless of who's looking at the opportunity. It's agnostic of kind of its ultimate use. It is intended to talk about potential. So I want to be clear as we get into this, it's not necessarily looking backwards. It does have factors and data that do some projection into the future to say, for example, for the WNBA, let's not look at where it was, let's look at where it's headed. One thing as well is that you'll see as we talk about a range for this number, that it is adaptable to depending on the package that's put together. Are we talking about title sponsorship of the entire league, or are we talking about one small placement around the ring of the boards or the signage around the pitch? What it isn't is almost as important, frankly, as what it is. It's rooted in the value of actual assets, not the latest. It's not rooted in the list of assets or the latest published deal. I think as Adam's already alluded, that's press releases, right? Big deal goes up, a new name's going to be on the side of the building. The press release doesn't always have the same details that some of us in the industry will see in the contract. It's not built to serve one side of the table or another. It's not a max value. I think that's the main kind of thing we want to say here is it is not the maximum top value that a sponsor should pay. Every team will have a list of sponsors paying a variety amount for different asset packages. It is not the absolute top value. It's not got multipliers and made up kind of escalators and things like that. And it's not just a professional opinion. Every single valuation you'll see today went through the exact same process to spit out its number. There was no kicker for, and they won the championship last season, so therefore we'll do a 1.5 multiplier or something like that. There's maybe a time and place for that kind of attitude and things like that, but we wanted to bring a very fair and kind of cold and rational approach to valuation. So if we keep going to the next slide, I kind of talked about what it is and what it isn't. I've hinted at it being a range. Despite there being a range, we're going to talk about one number today. A kind of a sweet spot range that's pretty tight. And if you think about the range of potential outcomes and how much you can invest with a team, we acknowledge that this entire story could be a relatively small investment with a team, showing up on the playing surface, maybe having a small community program with the team, something active at the concourse, all the way up to paying tens of millions of dollars to be on the name of the building or the jersey patch. When we talk about today, a certain sports team is worth somewhere in this range, we're talking about the midpoint. And really, functionally, the intention here is to give a brand who's looking to invest quick and factual guidance to say, if you're looking to get involved with that team, we peg the opportunity around this sweet spot based on the opportunity with consumers, not necessarily the absolute max that you could reasonably pay or the bare minimum entry point. Something that for most brands, most major marketers would be a sweet spot that would help them filter the opportunity. If we keep going, think of it like investment guidance. So, when we talk about lots of cool things that are happening outside sponsorship, if you think about websites where you can see house prices, and recommended buy, sell, this is listed too high. Same with used cars. You can go to a website and see, somebody's listing their vehicle. Here's what the algorithm thinks is overvalued or undervalued. That's kind of what we're thinking. And the goal is to be obviously compare what you're currently spending. Are we in the sweet spot? Are we above? Are we below? We can get some competitive intelligence based on what other teams are doing, and we can get some, leverage to either increase a brand spend and say, we think we're actually worth something in this range, or potentially on the flip side to say to a partner, we feel that's too high a price. We can't go there. It's just not, the math doesn't check out. So how do we calculate it? I know this is, we could talk for 17 hours about the details and variables that go in, but I'll talk about the key 4 steps that we talk about to value a property. And a lot of it starts with, work that's done to assess the existing ROI on sponsorship deals. So if you kind of back that all up, you start with the first piece, which is available on our Insights platform, which is how big is the fan base? How many people does this property reach? And is that a healthy number? It really starts there because obviously most sponsorships are only going to reach the people who are interested in the team. You get a big asset, maybe there's some local market attention amongst those who don't follow the team. But unless you're one of the top 1 or 2 sponsors on that team, the first fundamental question is how many people can I possibly reach with this? Same thing a marketer would ask about a digital campaign, a TV campaign, other marketing spends. So we start there. We start with tracking and knowing how big is the potential audience for a sponsor of, in this blurry photo, the Green Bay Packers. Next step, we go to what is a realistic reach for the sponsorship itself. So if there's 1 million, I'll just use big round numbers. If there's 1 million Packers fans, based on all the work we've done with NFL teams, post evaluations, ROI analysis, how many of that million can I reasonably register with as a sponsor? Is it 700,000? Is it 70,000? And so we're able to scenario plan depending on investment and typical outcomes to say, okay, we know how big the fan base is, and a sponsor, once it reaches maturity, will probably be present in the minds of so many of those fans, and the rest, still unaware and not necessarily open to being influenced. So now you've got that pool of people, and you go, and how many of them are going to be influenced? If you think about your classic marketing funnel, you go from kind of, am I aware of it, to now do I have elevated perceptions or changed consideration? So through evaluating hundreds and hundreds and hundreds of sponsorships, we're able to establish some very common conversions down that funnel to say, started with 1 million fans, 700,000 aware of us, and now how many are likely to have increased consideration, whether that's to buy a can of soda or to go for a test drive or to download an app. How many people can I, in the marketplace, likely turn the corner with? And then lastly, once you've got those numbers for all of these teams and all of these scenarios, you can look at spend information for what brands have actually put into successful ROI sponsorships in the marketplace to start to put some guidelines against that to say, if you influence 75,000 target consumers to take action, like go to a website or go to a dealership for a test drive, what is a good ROI story? Is it $5 a head? Is it 40? Is it 200? Just like if you work in the digital space talking about cost per acquisition or cost per trial and those kind of metrics. So if you start with a bunch of evaluations, figuring out what good ROI looks like, You back up that whole process, and now you're able to assign a value that gives some kind of sweet spot where if you pay this much for this property, chances are you're going to have a good ROI story. With the asterisks that we've put, there is an asset package that could potentially grow or shrink that. We love talking about this stuff, so I do want to go, there's more detail there if you want to scratch the surface. But one thing I do want to hit on before we go too deep is geography. We recognize, especially in this day and age, that fandom is truly global. There's Lakers fans in every country in the world, I'm sure. One of the logos here. With that kind of sweet spot of sponsorship we're talking about, though, we're typically talking about asset packages that wouldn't necessarily reach coast to coast or globally. We're not scenario planning for naming rights or title sponsorship of an entire league. We're sweet spot for what you might call an associate sponsor, somebody who's mostly going to realize their reach and impact in the local market of that team. And so we'll make some call outs as we talk about populations and how they help drive the valuation. That for a team in California, we don't count all of California. We recognize obviously that there's different territories within the state, and that fan bases kind of transition from one to the other as we get close. Other parts of the country where there's kind of more spread out geography, the circle might get a little bigger, but obviously the population isn't as dense there either. So I do want to say this is a local market focused valuation. And obviously if somebody comes and goes, wait, I'm going to be naming the building, I'm going to be on the jersey, and I'm going to do a national ad campaign, the geography and the value can grow with that. But if we give it a number, we're going to be talking kind of about a deal that typically lives and wins in a 200-mile radius or in the local state, depending on what team we're talking about. Cool. I'll throw it back to Adam. And before we go team by team, he's going to talk about, we did it for every team. So what did we learn about the leagues that these teams make up before we go kind of team by team by team?
All right, so let's get into the actual findings, which is the good stuff. As Adam said, asset value, asset by asset valuation is completely different. We're starting with the top-down approach so that we know going into it, what is the range? Where should we be? Where should we expect to be from an investment perspective? And that makes building an asset package a lot easier when you have an actual target. Most of the sports franchises that we're going to talk about today have the means to create packages that are worth tens of millions of dollars if they threw enough assets into them. That doesn't always justify it to the brand or make it worth spending for the brand. And so that's the value of starting with the top-down approach and then backing it up with that bottom-up build of asset by asset. So when we went and did this, we did it across 6 leagues. So we did the NFL, the NBA, the MLB, the NHL, the MLS, and the WNBA. We included every single team in those 6 leagues. And what we wanted to do to start is give you kind of a quick rundown, and these will be pretty rapid fire. Please do keep asking those great questions as they come up, and we'll spend some time at the end with Q&A and going through them. But we want to do a bit of an analysis on, okay, well, what's the average team value by league? Because that can tell us some interesting things about the differences of, what's the cost of entry to get into the NFL versus the NHL. And also start to pinpoint some of the things that we're seeing that are really driving value and where we see, that potentially continuing for years to come. So it may not be a surprise. This is all US data. It may not be a surprise to see that the NFL is our top performing or is the highest average team value. So the National Football League, from a league perspective, ranks one of the 6 that we measured. The average team value, and we'll get into the specific use cases as Adam talks through some of those examples, is $4.5 million, just under $4.5 million US per year. The maximum value is just over $9 million US per year. And as I said, we'll break that down further from a team perspective. So what is it about the NFL? I mean, it's probably not too surprising to you. I mean, they engage the most people in the US. But really importantly about the NFL is that they actually drive frequency of engagement, intensity at a greater rate than any of the other sports leagues that we've looked at, any other sport league, frankly, in the US ecosystem. So what we can tell you is that their average value is 1.6 almost times greater than the second ranked league, which we'll get into in a second. 7 of the top 10 most valuable sport teams on our top 50 list are from the NFL. And as I alluded to, that intensity factor is a huge player in our formula because, of course, engagement and engaged fans is great. We want to have mass reach. But ultimately, if we know that you're engaging with a sports property on a weekly basis or more, that's a lot more valuable to a brand than it is to just have a touch point at one point in time throughout a year. So the NFL definitely tops the charts and is has a pretty significant buffer between themselves and the second league. And things really start to get interesting as we look at the number 2 and number 3 spots from a league perspective. So coming in at number 2, we've got the MLB. The average team value is 2.8, just over 2.8 million US per year. The maximum value being just under 7 million US per year. It ranks second overall out of the 6 leagues. But it's getting very close with the NBA, which we'll talk to in a second. Of course, many of us have engaged with or seen and taken part of following the happenings with a lot of the generational players that are coming up, like Shohei, and now the new rookie pitcher who's gotten a lot of press over the last couple of days. But there's still definitely an opportunity on format to drive excitement. They've made a lot of changes to the format. There's questions now on whether that's actually paying out. Scoring seems to be a little low, but I think as the league continues to invest in improving format or exploring different initiatives to help that should continue to drive excitement. If they can drive excitement for the league, they should be able to cement their spot as the second ranked league from a total value perspective. Now, the NBA, a ton of global attention, obviously. They're just on the heels of the MLB from an average team value perspective, sitting just below 2.5 million US per year, with a maximum value of 6.9, just over 6.9 million per year. So they actually have a team that is more valuable than the MLB's most valuable team. And then from an average perspective, they're kind of neck and neck, or getting pretty close. 9 of the top 50 most valuable sports teams are from the NBA. So they've got a really strong concentration of teams. And what is moving the needle for the NBA right now and over the past couple of years is that we've seen significant movement in momentum. So consumers have a growing interest in the league, excitement and passion. So the emotional connectivity to the league is certainly very healthy and growing at a rate faster than any of the other leagues that we've looked at. So if those trends continue, we should expect to see that the NBA could be neck and neck or potentially surpassing the MLB from an average perspective in the next 12 to 24 months. Now, as we shift out of the top 3, we're now into another kind of another battle. There's a bit of room between the two, but the next on the list is the NHL. So the NHL comes in at number 4 out of all of the leagues, with an average team value of just under 1.5 million US, with a max value of 2.7. Obviously, fairy tale finish with a Game 7 of the Edmonton Oilers and the Florida Panthers. Couldn't have asked for probably a better finish. We're also seeing a lot of innovation from the NHL. So you've got the Four Nations face-off that's coming up. You've also got confirmed participation in the 2026 and 2030 Olympic Games, which will be obviously big drivers globally, but certainly also locally, right? Giving more exposure to the stars, building their brand, which of course all these teams will be able to capitalize on as consumers can connect with personality and the teams obviously that they play for. So we expect to see this league continue to grow and start to challenge the NBA, the MLB for that number 3 spot. Then we've got the MLS. So MLS comes in at an average team value of pretty much bang on $1 million a year, with a max value of 2.6. They've been in the news a lot. There's a lot going on. Obviously, you've got Messi, you've got Suarez, you've got Apple, you've got all these different things that are taking place, a lot of investment coming into it. Is the dust settling, or are we literally just getting started? I think the general sense, and it feels like from an industry perspective, the sense is that with FIFA coming up, of course, in North America, it's going to be another catalyst. It already has been a catalyst for continued growth and interest in building that. We have seen excitement for World Cup grow 26% in the US since 2020. And of course, we expect that to continue. Obviously not the outcome that they wanted from the Copa tournament, but there's a lot of interest, a lot of noise in a positive way around FIFA that should continue to halo back to MLS as they can continue to profile their players and build success for the league. And that takes us to the last league of the 6 that we measured, which is the W. You'll notice the average team value for the W is $750,000 US per year. The max is 2 million. They're right there neck and neck with the MLS. So they're not far behind. And then, I mean, you would see, and you will see if you look at our top 100 list, there are several teams from the W that actually crack our top 100 list. Adam's going to talk about one of them, the top ranked team, in a moment. Obviously, I think you'd have to live under a rock if you haven't been exposed to the rookies and all of the noise. And well, I mean, there's positive and there's negative, but ultimately, it's growing interest for the league, which we expect that will continue to carry. Obviously, the new media rights deal; these things are going to continue to carry momentum. So, very interesting to see how close they are to the other leagues. I think overall, we're showing you the averages, we're showing you the maximums. There's also some minimums that are available in the report, and those minimums definitely are generally tailored to smaller markets, but you will see that there are quite affordable price points or entry points to get into pro sport. And that's a really important part, especially for challenger brands that are out there trying to figure out how do we navigate, where do we go, how do we drive impact. So certainly there are opportunities across the board, but that gives you hopefully a general lens as to the landscape from a league perspective. And now I'll let Adam dive into the team side.
Awesome. Thank you. And that's, hopefully some very good cross learning. And as Adam alluded, the full report is on our platform. Anybody can view it with a free account. So if you kind of really like that league level comparison and want to go deeper on those mins, those maxes and stuff like that, please don't hesitate to sign up on the platform. You can see it for free and kind of digest it at your own leisure. So at the end of the day, those leagues are composed of teams. So let's talk about kind of who was at the top of this ranking, and then also just some cool examples of maybe valuations that caught our eye in the top 100. So we'll start with who topped the entire thing. Who was the number one team? The number one team across everything we measured across those leagues was the Dallas Cowboys. So for us, our guidance for a sponsor would say you're looking at a good ROI situation if you're in that 7 to 10 million per year range with the Cowboys. How do we get to that number, and why is that number one? So first of all, they've got a big local market. If we take Texas as a state, obviously it's not a massive surprise to say there's a big population there. But if we talk about people who are kind of in the marketing zone of 13 to 64-year-olds, a lot of our research does include teenagers. That 13 to 18 target is worth calling out. We do look at that activity amongst youth and value it appropriately. There's over 20 million consumers in that age range in Texas. And, there are other teams present in Texas, but the Cowboys reach 2 and 3 of that 20 million people. And if you talked about other regional deals or other marketing activities, to immediately get access to well over 10 million consumers who care about something is not something you get every day in terms of scale. Interestingly, they're a storied franchise. Depending who you cheer for in the NFL, you love them or you hate them, but they're still growing. In our data alone since 2019, so forget COVID for a minute and just say, where were we 5 years ago? Their reach in Texas has grown 14%. And, that's a very mature property in a very well-established state. And they're still converting incremental people to coming and joining Cowboys Nation. And Cowboys do everything different, right? They've got a show streaming about their cheerleading squad. They were on, one of the best seasons of HBO's Hard Knocks, well before the behind-the-scenes content was kind of omnipresent. And when they opened their new building, it's worth noting, they were happy to go 5 years without a naming rights partner. People, if you follow the league, called it Jerry World or Cowboys Stadium, I think was the technical name. Very rare to see a building open and them say, we didn't get the deal we wanted. But it's the Dallas Cowboys. They know they're worth a certain number. And finally, in 2013, they signed a deal. It's now, as we all know, at AT&T Stadium. And, another example, that was reported at 17 to 19 million per year. It may well be worth that once the ROI settles, but that's only one sponsor out of probably dozens, right? And so it's good to keep in mind we're saying to the typical sponsor of the Cowboys or a potential sponsor of the Cowboys, we would ballpark you in the 7 to 10 range because obviously you're not going to get the name of the building. AT&T's already got that. So they were number one across everything. And, if we go to kind of still in the NFL, but an interesting one, wouldn't have predicted once we finished and checked all our facts that the Detroit Lions would be in the top 10. And, they've been at times on the field not the best performing team, but there's a couple factors that maybe give us this, kind of interesting position. They're the first team that hits our rankings that isn't in one of the massive typical markets everybody talks about, right? In the US, you're talking New York, you're talking LA, you might talk Texas. They're in Detroit. And we still peg them well over, typically $5 million a year worthy of investing for. One thing that drove their valuation higher is we do profile consumers about whether their consumption is increasing. So is it year over year getting more intense? Is it growing? Are more people coming to the table? And there's been significant all-time highs hit for the Detroit Lions in 2023. Nearly half of those who touched the team in 2023 said that their consumption's increasing and will increase. Some of that's on-field performance. We can get into that and probably talk all day. It also has a lot to do with, how the team's marketed and the storytelling they do for the team. You may not think of it, but just in terms of how many people I can reach through this partnership, Michigan is a massive place. If you go, it's not New York, Texas, or California, but there's still 7 million plus residents, who could drive to a game or who are probably, number one pick Lions fans. And they rank in the top 6 for most passionate fans in the NFL, despite their ups and downs. You can see, I think, in media when they do make the playoffs or when they have a great season, the kind of long-suffering Lions fan is a bit of a meme, but the passion is higher than it is than many other franchises, and all of those contribute to drive that value up. Another interesting one, if we want to go to, I am a Packers fan, so I forced this deck in, but there is some interesting storytelling about the Packers. Green Bay is not a big place. Green Bay is a very, relatively small market, but they really do have a larger pull to the state of Wisconsin and the surrounding area, not to mention a national fan base. There's over 11 million people within 200 miles. And if you'd use that 200-mile radius as kind of, could you drive to a game and then get home without having to get a hotel room? That's a large group of people for whom this is their local franchise. Another factor that really surges their valuation up to that 5.7 peak is that if you just take the simple association of a brand sponsors this team and how strong is the lift in consideration we get as a result of that partnership, the Packers are number one across. So putting the Packers logo on your product or having your sign outside the stadium as fans are there, the just default lifting consideration for that brand is the highest among any NFL teams. And it's kind of like a trivia question, but their name is almost like, 100 plus years ago is sort of like a naming rights. They're the Packers because a local packing company was the first sponsor. And so they've, not only are they community owned and have this history, but they're kind of also part of sponsorship story as well, which is pretty cool. And so, we want to acknowledge, even though they play in what is notoriously a very small market, they can still generate massive sponsorship valuations because of their potential and frankly because of some of the stories about who they are as a team that has driven the passion and the fandom that in metrics drives a valuation result higher. We're going to leave the NFL behind for a second and talk about MLB. So we talked about MLB, and there was a time when the most popular article was to say, is baseball no longer America's pastime, and things like that. With the changes to the game and the young stars, our data started showing even last year a surge in interest amongst youth, strong momentum for MLB. And one place where that's been true for several years is in Texas with the Astros. And as much as Dallas is, and the Cowboys may be the owners of that state when it comes to NFL, the Astros show really strong performance in our data for the state of Texas. They're clearly ahead of the Texas Rangers and some other franchises in terms of passion and impact for sponsors. It drives them up into the top 20. Interestingly as well, we've actually measured actual sponsorships here. So I know as much as this value range is maybe hypothetical for a future sponsor, we've measured the outcomes for HEB and for Minute Maid, who have naming rights arrangement. They achieve, versus other teams we measure, exceptional recognition as sponsors. So they also give us evidence in market measurement of sponsorships that they execute very well. And when you partner with the Astros, you generate high awareness. We, in another report, also looked at different sponsorship creative and sponsorship activations. HEB, which is a local grocery chain, does commercials with players every year. And those are some of, as simple as that concept is, that is some of the strongest creative and activations we tested this year. So nice to see when the value is hypothetical, that when the measurement lines up and says, yeah, and the actual sponsors are getting great ROI. We'll go to Adam teased it. Within the top 100, there's WNBA franchises, which is really exciting. It makes sense that they'd have to be, to really compete, in the bigger markets, because ultimately, as we've talked about, you need that base of consumers to drive value. Ultimately, you're through a sponsorship, you're trying to influence sales and you're trying to influence business metrics. So the more the people you can do that with, the more the cash register rings. I want to be clear, everything we're talking about, the W here, was pre-2024 season that just started. So some of these values, hey, let's take bets, but we know most likely they're going to go up. We just all saw the news yesterday. They're probably going to sign a $2.2 billion media deal. Caitlin Clark broke the assist record last night with 19 dimes. But they do, that Liberty have the benefit of kind of being that crown jewel of the franchise, playing in the major market, getting lots of exposure and brand activity around them. And, as much as we're saying there's a package there that could probably make sense for the $2 million range, we don't expect that number to stay the same forever. There could probably be packages that go much higher, but for a good ROI situation with where the league sits now and where the Liberties sit within the New York sports scene, our valuation puts them top WNBA franchise and in 70th spot of all sports franchises we measured in North America. We've got, and then another New York team. So not necessarily surprised. They had a great season. They're the top performing NHL team, the New York Rangers. They've cracked the top 50 overall amongst all these different leagues. They've got the right mix. So they're in a large market and they've got clear separation from competition. So the Rangers, on all our metrics, top the Devils, who are just across the way, top the Islanders. So they do have other very close nearby teams, but they, as a media empire and a franchise and being part of the MSG family, separate on reach, passion, engagement, momentum, all those metrics. Interestingly, it doesn't necessarily drive our generic valuation higher, but if we were working on a specific brand, there's a really attractive audience for the Rangers. Engagement is 1.5 times as high amongst small business owners, which is a super attractive target for tons of sponsors. They need cloud services, they need business accounting and B2B software solutions, and it's even demonstrably higher amongst high income households. So there's also that quality of who you reach that helps, inform evaluation. And they're top 3 in terms of intensity. Adam mentioned that earlier about the NFL and how it drives value. When we talk about intensity, it's not just how many people you could potentially reach. It's really about how many of those you reach on a daily or a weekly basis, because every touch point's an opportunity to drive value for a sponsor. So those are some of the highlighted ones. There's 100 of them, so we couldn't do them all, but we wanted to call out both who kind of topped the charts, who was, interesting movers and shakers and stuff like that. And if there's one we didn't get to, please don't hesitate to reach out and say, what does the top 50 say about the so-and-so? And we'd be happy to correspond with you about that. But I'll throw to the next slide here as well.
Yeah, sounds good. Thanks, Adam. So as you said, we're skimming the surface, but giving you hopefully enough to see what's behind the opportunity value and what it means. But I think one of the biggest questions we get is, well, how do we use it? Adam alluded to some of the use cases that are obviously the most common in terms of comparisons, market intel, competitive intel, as well as obviously arming yourselves for negotiations or renewals. One of the things that we wanted to show is one of the ways in which we use this with some of the brands that we work with is essentially to look at and to map your sponsorships across your entire portfolio. This is obviously a completely theoretical, completely made up. None of the numbers in terms of the brand investment are accurate, so don't come at us over that. But it gives you a sense. If we look at just those six organizations, those 6 franchises that we just talked about, and we plotted the ceiling of the midpoint opportunity value that we've talked about versus a theoretical brand investment, you very quickly have a ratio, right? That you can say, are we overspending? Are we spending the right amount? Are we underspending? And there's always going to be a mixed bag. This is not to say that it's perfect. As Adam said, the next questions are, okay, well, is there a reason that you're overspending? Is it because it's a super contested or highly contested and competitive category? Or is it because you had to because of different political or other internal stakeholders that were kind of driving it? There are a lot of things that go into a deal. That's the art. This is the science. But what this does very quickly from a portfolio mapping perspective is gives you a sense across an entire country. If you're making 6 investments or if you're making 60, you can line them all up. You can look at the dollars and cents that you're spending. You can look at the recommended opportunity value, and you can very quickly identify some areas that are worth probably digging into a little bit further, or areas that, of course, you could say we're getting a great deal. As we've talked about throughout this whole thing, there is a range. We're talking about the midpoint because we think that that's the average. That is the average sponsor of these franchises. If you're only in naming rights and jersey patches, or if you're only in the community kind of tier of like you're kind of activating through boards and through, boots on the ground, our evaluation methodology scales. So we're happy to have that conversation, happy to give you at least our sense or two thoughts on how we would approach it and how we can essentially map your portfolio. Similarly, with properties and rights holders, we're happy to also work with you to show you the range from, from the kind of community to all the way to the naming rights. And the beauty of this is that it's a top-down, completely data-driven methodology that is entirely transparent. The numbers don't change. Doesn't matter who asks us. These are the numbers, and that's the beauty of it, is that we can create some consistency in a currency that is traded all the time. So that's at least gives you a sense as to how it can be used or leveraged in your day-to-day. But that kind of wraps us up in 45 minutes. It's a lot to get through. There's a lot more that we could talk about. We love talking about valuation. We're the first to admit that there's no perfect way to approach valuation out there. So we think that having a conversation and dialogue around it is obviously the best place to start. And we appreciate obviously all of you joining in today to be a part of that. We've left a bit of time for Q&A, so we'll dive into a few of those. If you have questions, please fire away in the chat. I'll kind of get started. One of the ones that we got was, how do you evaluate new expansion teams, which is an amazing question. It largely has to do about getting ahead of it. So we literally will start with, when is the franchise expected to start, or to take the field or the pitch or the ice or whatever it may be. And we'll start to look at, is there consumer interest and engagement building? So we will start kind of earlier than when they hit the field to see the different touch points, the different milestones. And then, of course, we leverage our benchmarks to say, okay, for similar properties within the league who have started, what was the build? What did that look like? So we go get the data. We'll follow that, obviously, throughout the journey of that particular franchise. And then we also leverage those industry benchmarks or league benchmarks so that we can project where we expect that particular franchise to be. So it takes a little bit more, but the methodology is similar and leverages the same approach from a data perspective.
I'm going to get to, did you want to go? I'll pick off a couple others that came in earlier, just so that I make sure we get through them. One question that came through: do other businesses question your benchmarks? Absolutely. I
hope so.
Yeah, exactly. And it goes both ways, right? Ultimately, it comes down to who can share, transparently how it was built and face the critiques and the challenges. Nothing's perfect, but there's rarely a meeting that goes through that goes, wait, can we dive in on how that benchmark was built? So yes, absolutely. But I think we're proud that it's fact-based and consistent, and not necessarily, as we talked about some of the things, it wasn't. We see those as often kind of weaknesses in answering those questions, and we try to avoid building something that relies on them. What do you mean by buyers and sellers? And sometimes we're throwing around terms that's not super comfortable for everybody, and we sometimes don't define things well enough. Just to be clear, when we talk about a buyer, we're talking typically about a brand who's buying a sponsorship or buying a sports team sponsorship, and the seller being the team itself. Adam, maybe I'll throw this one to you. What is the difference between the valuation of a club or a team like we did today, and then a league, which is like a super interesting question?
Yeah, I love that. It's a great question. So we have done a lot of work on valuing leagues. Of course, for any kind of like piece that we're going to release, we want to make sure that it's pretty focused. So and obviously with 150 some odd sports franchises in the US across the 6 leagues, we've really focused on teams, because that's really where we see the breadth of US brands investing. So that's where we started, but we do a lot of work on the league front. It's probably something that you can expect to see from us in the not too distant future, so that we have also those league benchmarks. Building on that, there was a question that we got, which was a great one. What about combat sports? The methodology works for other properties. So as I said, we focused on sports teams to be consistent so that we could draft a list and provide, value. We know there's a lot of brands out there that are investing across multiple sports teams in different leagues. So that was kind of the focus of this particular push. But if you want to talk about combat sports, you want to talk about music festivals, you want to talk about literally cause marketing, we have the same methodology with slight nuances that account for obviously the differences in intensity that a league will generate or that a property will generate. But they go into the same model. The output's still transparent. So reach out. We're happy to chat, show you what we've done kind of in other arenas. There's a question: transparently, does Sponsor Pulse have competitors out there?
No,
Yeah. I mean,
we're the only ones. No, sorry.
We absolutely have competitors out there. We don't know anybody that's doing this type of valuation or valuation this way. Some might see that as a weakness. We see it as a strength. We compete, of course, with a ton of other marketing agencies and businesses that have their own approach to valuation. I think that we can be very complementary given the top-down, consumer-driven approach versus what we see most of as the bottom-up kind of asset-by-asset build. We do that as well. But I would say we love working with agencies. Our favorite calls are when we're talking about valuation and kind of comparing notes and approaches, because I think it makes us collectively as an industry a lot better.
Couple questions about stepping outside the US, and the answer is absolutely. Adam and I are both based in Toronto. I know it's very close to the US, but still, our data is global. We've done valuations in Europe, Asia, South America, Middle East, and I'm probably missing some regions. Ultimately, I think you can hopefully see that the methodology comes down to the business outcomes, period. How many units can we potentially sell of our product? How many app downloads can we generate depending on the brand? And, then calibrating those for the marketplace and what spend is expected and what kind of profit you can generate by having those outcomes. So short answer is yes. This is all UF sports team focused because it was kind of a fun playground to do a top 100 in, but there's lots of work there. Adam, do you want?
Yeah, there's one on.
Sorry, go ahead.
Yeah, there's a question on what do you think is the big picture for women's sports in general, which is, I mean, that's probably an entire webinar or discussion in and of itself. I think for now, like we expect this list next year to include the NWSL, the PWHL. There's so much obviously opportunity there where there hasn't been as much attention in the past, and I think thankfully we're seeing that we know and we have the data that proves that there are tons of fans of women's sport, and oftentimes people say, "Oh, like it's a different segment." I mean, males are the most prominent fans of women's sport. There are a ton of different narratives and different storylines that support why people should be continuing to invest in women's sports from a sponsorship perspective. We expect that the values, as we're seeing even in the media rights kind of equation right now, are going to continue to grow. And some people will say, well, some people may be surprised that the W teams or some of the franchises are actually well ahead of other professional teams and other leagues, but like that's the reality. That's based off of the fan bases that they actually have, and fans are how we unlock value, how brands unlock value through sponsorship. And I think that normalizes and kind of creates a level playing field for a discussion on what is the value that we should expect to spend and extract here. So we're certainly, I mean, the data points is like we're big believers. There's tons of opportunity there, and there will continue to be as there's more attention given and more frequency of exposure given to those leagues.
Yeah, if you're, and so Meredith just asked that question. That's my favorite kind of question, which is about the methodology and how we get at these numbers. So I'll get to it in a second. But we, as Adam alluded to, we could have done a whole hour on momentum for women's sports. Who's the audience? What are we seeing? How is it personality driven and things like that? So don't hesitate to either, frankly, just Google Sponsor Pulse women's sports stuff. There's lots of content, or ping one of us or somebody on our team can fire you some white papers, some links, some things like that to help support that storytelling. Meredith, thank you. What components, in the valuation factor in the fans' likelihood to purchase? That's an awesome question. I'm going to try to answer it efficiently because I love this stuff. So it starts with measuring tons of sponsorships that are in the marketplace and looking for elevated consideration amongst those reached, and starting to benchmark, is 1 point lift good? Is 40 good? Is 80 good? So you do that 1,000 times plus, and you start to get a picture of when a sponsorship's working, how much consideration lift actually drove positive outcomes, so that you can kind of get what's real is real. And then we go back to the work we're doing to track these properties and look for propensity to have elevated consideration amongst these fan bases. That ties into my previous answer, which is, well, they may not reach yet as many people as the men's sports leagues. The default lift in consideration when brands associate with women's sports is higher than it is currently for men's sports. Obviously, it's amongst currently a smaller typically audience of attendees or viewers. But and maybe there's a honeymoon. There's lots of things you could add to the mix there. But generally speaking, just the default lift in consideration you get by saying my brand is an official sponsor of this women's sports team is a stronger factor than we get for more established stuff. So it's based on tons and tons and tons of work over the past 15, 20, 25 years of measuring sponsorships, and then ongoing tracking, looking for lifted consideration for brand sponsors amongst the properties we measure. And I know I said I'd do it short, but I gave a long answer, but there you go. Hopefully it's an okay one.
That takes us to 155. We're probably going to call it. I think that is answer. We've just about answered all the questions that came through. We'll give everybody 5 minutes back. Wanted to thank you guys. Encourage you, please reach out. Let's talk valuation anytime. Use the resources that are there. They're all available at sponsorpulse.com for free with a free account. It doesn't need to be a tough conversation, and we've obviously got some work to do to fix the level of trust between buyers and sellers and the way that valuations are done. And hopefully this was a helpful exercise. If you have any thoughts, if you have any comments, feedback, please reach out anytime. You can reach us either via LinkedIn or on our platform. We've got a chatbot, fire away. We're always happy to chat. So thank you, everybody, for participating and for all the questions and for spending an hour with us. And we will hope to chat with you all in the not too distant future. Thanks, guys.